Hello. In this video, I'll explain why many traders use the RSI indicator incorrectly. RSI is one of the most popular indicators, and even if you only know a little about trading, you've probably heard of it. But despite this, 99% of people actually use this indicator the wrong way. Some even open a position the moment the indicator touches the oversold or overbought zone, and you shouldn't do that. Yes, you might get lucky, and the indicator may show good results occasionally, but over a long distance your statistics will be negative. And what if I told you that the default RSI settings everyone uses are far from optimal? That's why in this video I'll show you the most effective settings, and also explain alternative ways to use the indicator. Let's move on to an example and break it down in detail. As I said earlier, traders use the indicator as overbought and oversold zones. So if RSI moved like this, most traders would see it as a sign of overbought conditions and open a short position. But even if a chart enters the overbought zone, why can't the indicator become even more overbought? This means there's a flaw that increases the error rate. We'll find the solution in the indicator settings. It's simple. Right now, you're using the basic levels, 70 and 30 for overbought and oversold zones. We change these values to 80 and 20, which gives fewer signals and reduces error. The next step is confirming these signals across multiple time frames. For example, this chart on the 1-hour time frame gave us 2 signals, but when we switch to the daily time frame there are no signals at all. Therefore, we don't take these trades, because we need confirmation on higher time frames. Let me give you a very clear example. We're on the 1-minute time frame. Price makes a sharp move upward. RSI enters the overbought zone but almost immediately pulls back, so we wait. After some time, the price keeps rising and RSI enters the overbought area again. Then we switch to the 5-minute chart and see that the indicator has just now closed above 80. This is the initial confirmation. Next we check the 15-minute time frame and see that RSI is also in the overbought zone. That works for us. But the fact that RSI gives short entry signals on different timeframes does not automatically mean we should open a trade. We still need stronger confirmation. One way to do that is by adding a candlestick pattern confirmation. On the chart we see a bearish engulfing pattern. RSI also starts returning to normal, strengthening our signal. This is where we open a position. Don't forget the stop loss, we place it above the top of the candlestick pattern. For take profit, you can use the VWAP indicator. You can secure 50% of the profit when price returns to the RSI midline. Then, I'd secure the remaining 50% when price returns to VWAP. Additionally, RSI itself can serve as extra confirmation, specifically how it behaves relative to price. RSI was created to determine market strength, as suggested by its name Relative Strength Index. So any overbought or oversold readings with the adjusted settings will be very useful. Now let's go to the chart. As you may have guessed, we'll be using divergence and convergence between the indicator and price. You can see here and here, the indicator on the 5-minute chart is in the oversold zone. Next, we look for confirmation on a higher time frame. We open the 15-minute chart. RSI is still below 20. That's our first confirmation. After some time the price pulls down again. But if you look closely, you'll notice that price is diverging from the indicator. While price continues falling, RSI starts moving out of the oversold zone. This signals an exit from oversold conditions. Therefore, we confidently open long positions. Stop loss goes below the last low, and take profit is 3 times larger. A mirror situation applies to short setups. We see RSI in the overbought zone on the 5-minute chart, but it corrects almost immediately, so we skip that move. Later, RSI returns to the overbought range again. We switch to the 15-minute time frame and see that the indicator is still above 80. We also notice divergence between price and RSI, indicating a reversal. That's where we open our position. Stop loss goes behind the last low, and take profit is 3 times larger. And remember, if you want these trades to bring real profit, not just pocket change, it's simple. 4% a month on $1,000 is $40. 4% a month on $100,000 is $4,000. You're not chasing huge returns, you need more capital. That's why I work with Hash Hedge, a prop trading company that lets you trade with their money, not yours. You pass a simple test, prove your discipline, and get access to an account from $5,000 to $100,000. Risks are controlled automatically. You can't blow the account. The system won't let you. This is the discipline many lack. So, if you want to trade strategies like this with real capital, try Hash Hedge. Link in the description.